The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. How's everyone doing? Hope everyone had a decent holiday here in the U.S. Don't know whether this is Turnaround Tuesday or it'll be Turnaround Wednesday. I want to thank all the people that have joined our community and made our promotion successful. Welcome to, I believe, the best community on the net. And I think that you're going to grow as a trader, immerse yourself in it. Don't just join and not participate. That means, watching Paulie's stuff in the morning and after face, getting to know people in the chat room and paying attention there. Good morning, Saeed. Saeed is here with us today. He's going to be able to talk to Saeed at the top of the hour. Made a very good call in gold last time we were together, so interested in getting an update from him. The dollar has been acting great. I caution a little bit trying to press the short side of euro here. We're not getting confirmations on several time zones. It's becoming time frames. It's becoming grinding type of decline. Could be set up just to squeeze shorts, maybe go for the stops above this high. I think a rally back to 1420 would not change the picture. Line in the sand again is 1320. Back under this low. I think we're going to have a pretty big continuation move. So for now, I think that I wouldn't be pressing it. If I'm bearish euro, I wait for some type of rally, some type of retrace off of this move. Yesterday and last night, stock indexes were under pressure, but they're coming back here. One thing I can say, NASDAQ is breaking a very sharp trend line here. But as you can see, we had a confirmed high before the holiday on the weekend Friday into the eclipse. But if we had a new high from here, it may not confirm on the 4-hour. And I think for sure, if you look at the RSI down here, would probably have a very hard time confirming here. So this line needs a little adjustment, but we'll see if we just get a failing rally here, one more high. I still think there's a probability, a possibility that we get some type of, I've been talking about a Fed break. We're about a week away from February, so we'll see what happens. One of the reasons is there is a blackout on buybacks in February, so you're not going to have the support of the market, corporate buybacks during that time frame. And even if we're not going to wash to a new low, up in here, some people are looking for even higher here. We're due for some type of correction of this advance that we've had from the end of last year. So it's the best webinar in the world. What's the topic about? The topic's about learning how to take good signals, learning how when you're taking trades in the market that you know where you're wrong before you click your mouse. You also know what you're looking for if you're right, so you have a good R to R. And if you just go to take a trial, you'll see how many instruments that we trade here, Mian. It's $1 to check us out. And I think that we have the strongest team on the net as well. Grega for Elliott Wave and Andre for Harmonic, and Blake for basic technical, which it sounds like it's simple, but it's not simple. It takes time to recognize patterns. Steve Volge also puts out some patterns in play, and you're going to hear Steve in a little bit. Oh, Alan, thank you so much. Alan says the strongest team. So we appreciate that. And we have Stelios, who called the EG top and the NOK top and traded on a bank desk for many years. He's our macro analyst. And then we have some very strong leadership in our members chat with Amanda and Joe in there. So I guarantee you our mission every day is to build you up and edify you. So that's what we're going to do today. So welcome to FACE. Mienso Son Babu. Nice to meet you. And we'll see what happens in one other thing I just want to point out that could be setting the stage for a correction and a buying opportunity is here in crude. We had what I call a little 3 drive to a top formation. 1, 2, 3, tweeted it out there. So perhaps we're going to get this formation a lot of people are looking for, which you see on the daily, which could be some type of head and shoulders formation, which means that here's your neckline, pretty clear. And if we have symmetry on the right shoulder with the left, it implies a break back down towards the 49 level. So we'll see how that plays out. And then the measured move, 54 to 42, is going to take you back into the 60 range, maybe even 68. So could be a great buying opportunity setting up after this pullback in crude. And with all that being said, I want to toss it over to Blake Morrow at Pipsar and see what Blake is thinking this morning. Blake makes his living trading. This is a project for him here at ForexAnalytix to help people and to build a community. But just like in our chat room, many traders make their living doing this. It's not a hobby, and Blake is certainly one of them, running a fund and one of the more famous funds, the Gallows people. So, Blake, how you doing today? I don't know if you were active yesterday, or I saw you were a taxi cab taking your kids everywhere yesterday because they were out of school. How's it going today, partner?
Good. I'm excited for him to get back to school. And just for clarity, no, I don't run the fund. I just trade. Yeah. I just trade in the fund. Yeah. Yeah, I know. I just want to make sure that that everybody's clear on that. I trade for Gallows Capital. So yeah. But you know, the euro dollar just continues to bleed here. Remember, we have the ECB in like 2 days. So and with equities under pressure, we're seeing a little bit of downside pressure in the euro. We have a bit of a descending wedge here. Let me get rid of this. I'm on an hourly, so you can kind of see what I'm doing here. You know, we have a little bit of a descending wedge. That means you can't really get bullish until we get above like 113.75, somewhere around there. You got to, you know, somewhere around this neighborhood, you got to start seeing a little bit of a reversal before you can get bullish with the euro, at least from a reversal standpoint. So it's just, you know, getting down towards channel support here. It came really close overnight, and you know, the market's just kind of bebopping around. There's a few things that have caught my eye. First and foremost is the S&P. Now, as you pointed out about buybacks, one of the things that's really supported the S&P is the consistent buybacks in equities. So, you know, which has taken us basically up towards you know, big resistance here. Let me just put that down there with the S&P. It's taking us back up to the underside of this big broken trend line, big green. You know, I've pointed out on many different occasions yesterday, and how
far back does that go? 2016. You have
yeah, okay. early 2016. So
wow,
February.
That's 3 years trend line.
Yeah, so we tagged the underside of it at the end of last week, and we're just kind of, you know, rejecting it as of now. But it's, you know, the question is, are we going to hold? And that was my point yesterday. Is in the event that we break above 2,700, that's when things are going to get a little bit more bullish in equities. We have to really crack above, you know, 2,700 in order for the market to get bullish. Now, as we're rejecting here, a couple of big developments have happened in currencies. One of them predominantly is the Aussie yen. You can see the Aussie yen. This pair really, you want to talk about, excuse my language, but really pissing me off more than anything last week. See these spikes up here? I was short Aussie yen twice with big size too, not small size, big size. These spikes One of them was the Mnuchin comments. The other one was I can't remember what it was. Maybe the Friday was the Mnuchin comments. The other one was some other thing. But anyway, those spikes, both algorithmic spikes on headlines, stopped me out, reversed, and it was so irritating to me last week. The amount of money that I lost on these, and you can see how violent those spikes were. Both of those spikes, right into channel resistance too, just above channel resistance. But you know, for all intents and purposes, we held. Now we're below it. You can see the Aussie yen is below channel resistance. So now, because we've broken down below that channel, I'm a little bit more hesitant about risk appetite. I think risk appetite is going to start waning now. But you know, before I get too carried away with the potential of the market rolling over, you have to realize we are in North American trade, and the markets have been extremely resilient in North American trade. So it's hard for me to get too bearish at this point. What I'm actually looking for is the Aussie yen to start breaking below the 77.80 here, and then that would really turn me a little bit more bearish U.S. equities. So, but that's one of the things that's keeping the euro under pressure, because you know the euro yen is feeling a little bit of downside pressure right now. The cable also, it spiked up overnight. We're stalling ahead of the 618. But the pound's actually holding up pretty well. I have to admit, if you're trading the cable, you're probably thinking, man, this thing is holding up better than you would think it would be doing in this type of environment. But the pound really, in order for the pound to get any type of bullish activity, we've got to get above 130. And as long as we trade below 130, then it's still at risk of a more severe pullback. Let's take a look at the Aussie. The Aussie is broken, just like the Aussie yen. The Aussie dollar has broken lower through its support. It's actually testing the 24% retracement or 23.6% retracement currently, but the Aussie it does look a little at risk. And then I think we have CPI data out of New Zealand tonight. So New Zealand, yeah, we have CPI data out of New Zealand, and you can see the Kiwi is in this big triangle pattern. We're smack dab in the middle. So I would assume, following the CPI data out of New Zealand, we're going to test the upper end or lower end of this triangle pattern. Because it seems like inflation, and if you look at, let's see if we go over the calendar here on investing.com. Let's go over to the New Zealand CPI. Let's see if we can get the chart. Okay. New Zealand CPI has been, generally speaking, pretty strong, and if it continues to beat, beat like the 1.8% or year over year, I mean, the Kiwi could spike up towards that, towards the 68-cent level, but obviously a miss. We're heading back down to 66.50. One of the things I'm a little bit more hesitant about the Pan-Pacific or region is that the slowdown in China might actually keep inflation might be a little bit more benign than in the U.S. and Europe. So I think we have to be a little bit more careful with inflation data as we're looking in like like I said, the Pan-Pacific region. So this is going to be a really interesting number today. The dollar Canadian, we talked about this yesterday, as it was a very slow day yesterday. I mean, if you guys were trying to trade yesterday, it was like near impossible. The market just didn't move. But we are testing the upper end of this this possible bear flag pattern. As I mentioned to you guys yesterday, if you were listening in, I'm not normally I would be shorting the dollar Canadian here. Normally I would, but today I'm a little bit more nervous because equities do look weaker, and if equities look weaker, then the dollar Canadian could negate this possible bear flag pattern. If you guys are looking for something to do and you're like, well, I'm just looking to trade. I mean, this is typically the spot that you would short the dollar Canadian. If you did, which I'm not doing, but like I said, if you did, I would just keep a really tight stop. I wouldn't risk much here being on the short side, because if equities do roll over a bit, we could see the dollar Canadian spike up past 133.50, and we could start challenging some of the above like 134 potentially. The dollar Mexican peso, we commonly refer to her as Salma Hayek in our chat room because of her spiciness. The U.S. dollar Mexican peso is really come off this key trend line here, 78% retracement. If you are a person who believes that the S&P is probably near the upper end of its range versus the lower end of its range, in other words, you think that the S&P might sell off a little bit, well, the dollar Mexican peso may be a better trade to the upside. I like it long. I actually picked up a little bit long. I'm going to buy more on a bid, so that means I'm trying to buy some as we dip, for an eventual move higher. I think the dollar Mexican peso is actually looking pretty good on the long side, and you can see we're working off some really oversold conditions. I think we can trade back up towards the mid 19 level, maybe even 20 as far as the peso goes. Swissy is looking a little heavier, but you have to look at this RSI. The 4-hour RSI looks like we're rolling over. I know we just spiked up. That literally happened over the last 20 minutes. This thing has spiked up, but I think that the U.S. dollar Mexican peso might be set up for a decent short. I'm not trading the U.S. dollar, or I'm sorry, U.S. dollar Swiss franc. I'm not trading the Swissy at all. I haven't. If I miss the trading it on the long side, I pretty much stay away from it on the short side. The carry costs are too high for me with the size that I put on, so I don't tend to trade the Swissy all that much. And the U.S. dollar Norwegian krona, we still have this big head and shoulder pattern. It hasn't completed yet. We're probably going to be challenging some of the underside of this breakdown point, so this might be a good setup for a short, even though I'm not short. It's setting up not too bad. And the U.S. dollar Swedish krona is still pretty sideways. We're in this big triangle consolidation currently. It might be a pennant, but key resistance comes in around 910, 911 on the U.S. dollar Swiss franc. So other than that, I'm really just kind of hanging tight. I'm looking for a little bit further dip in the euro dollar to really start buying this one. I want to be long as we approach 113.20. As I mentioned to you guys on the week ahead video, I also talked about it yesterday. I mean, dips down here, and I'm looking to get long if we can make it down there. So, with that being said, I know we have Stelios and Steve here. Stelios, do we have any new developments on the UK front?
Yes, we did. Good morning.
Good morning, and maybe that accounts for a little bit of the pound resiliency this morning.
Well, that actually is because of numbers that came out. Average earnings index came in at 3.4% year on year, better than expected, and now quite a bit higher than inflation, which is currently at 2.1%. So the individuals are not feeling the squeeze as they used to, a year ago, and this is definitely good news. Unemployment also dropped to 4%. So one has to think, how would the UK economy be doing if we didn't have this Brexit uncertainty? It's doing pretty well so far. But yeah, so that's the main reason why the pound got a lift. Now we did have some more developments in terms of the Brexit process. So we have the timing for the next step, which is another vote on an amended proposal by Prime Minister May on the 29th of January, a week from now. And there are going to be some amendments put through by members of parliament. They have to be voted first. And these amendments include things like what Jeremy Corbyn really wants, which is to prevent, some kind of plan to prevent a no-deal Brexit. and also another amendment about the Irish border. These are the two big issues, and so the main commentary is that the new deal that May is going to put to the table for a vote doesn't look like it's going to be much different than the old deal, but we still have a week left, and we have all these amendments come through. So we'll see what happens with that. But the main thing is that May is now reiterating at pretty much every occasion she wants to speak to the other party. She wants to cooperate with them, although she is a bit inflexible when it comes to a no-deal Brexit scenario, taking that off the table. So I don't know how this is going to work, but we're getting now to close to the end of this whole shenanigans, and something has to be done. So
and as we were talking about yesterday, that the new deal isn't going to look a whole lot different from the old deal. But really, the big issue is the backstop, right?
Yes, that's the main issue, and that's one thing that the May wants to negotiate upon, but the European Union seem to be completely inflexible. But then again, we said yesterday, politicians are politicians; they can change their minds when their circumstances are right. So although they seem very firm about it, we can't really rule out anything. That's the main point, I think.
Got it. So, what do you? I mean, technically, just looking at the cable, and I know I just said this earlier, but I'm really, dead serious when I say if the cable gets above 130, I'm probably going to get long, and I don't even care the reason why. You can throw whatever reason you want at me. I don't really care. I think if we get above 130, I'm going to buy the pound almost across the board. And those are that's the kind of thing that for me, I've come into realization that over the years is when a really big technical level is breached in the market, regardless of the reason, if I can justify, especially positioning, like in this case, would be lopsided short the cable for years, well, months. I'm going to get long, and I don't care about the reasons why so much, because usually it becomes a self-fulfilling prophecy at that point in time. So, if the pound breaks 130, what I'm trying to say here is I'm getting long no matter what. And I'm buying, the cable. Doesn't matter what. I've already got some pound New Zealand that I've been playing on the long side. If you guys are ForexAnalytix subscribers, you guys know that I have a pound New Zealand pattern in play, going on. And the reason why is this big. I'll show you guys really quick. We have a big inverted head and shoulder pattern that I'm playing, but again, it's the pound above 130, and I'm probably going to start buying it universally across the board, or at least spread some risk against a couple of different pairs. Pound Aussie is also one of those currencies that you got to keep an eye on, because we've had this really tight, and I guess I should go out to a daily chart here, really tight triangle consolidation. You can say it's a range, and even if it is a range, we come out of this triangle, we're probably going to test the upper end of this range. So we go from 182 to 186, 187. That's a 400 or 500 pip rally just to challenge the upper end of this. You can say this is just a big old range. Well, if it is, it's still going to give us a lot of opportunity back to the upside. So that's kind of what I'm thinking with the pound, at least for right now. So
yeah, I mean, I actually agree. And although a technical break, like you said, on cable above 130,
130,
as long as there is no closure on Brexit, and actually the no deal Brexit scenario is avoided, I personally would be a little bit cautious. But when that happens, and if the no deal Brexit scenario is avoided, I will get long the pound. And I am, I'm very different in terms of trading than what you are, or Gregor and Steve. I'm a much more long-term trader, so I don't mind missing the first 1 or 2% of the move, because when this happens, I think sterling is going to do really, really well. So when the news comes out, I'm sure sterling will rally 1.5%, whatever it is on the day. I don't mind missing the first little bit, and then I just stick with the trend, which I think will continue. That's just my way of looking at things.
Right. And, and I look at this the euro pound, and I know we had, this was, for those of you that are not ForexAnalytix subscribers, which by the way, you all should be at some point in time. And what's really interesting, and I know this has nothing to do with what I'm about ready to talk about with the cable. A gentleman by the name of Charlie just joined our community, and he saw the book that I posted on Twitter last night, which is the So's Bandit. And he goes, "Oh, Blake, you're a fellow So's trader, a So's Bandit." And he goes, "Yeah, back in the early 90s, I used to trade in Dallas. Then I moved to Austin." I'm like, "Oh my God," and it ends up that we end up knowing the same people in Austin and traded with the same people. Because I would fly into Austin to trade with these guys, because these traders were phenomenally big, and we were big. I was like one of the biggest traders in our Scottsdale office, but some of the traders there were like dwarfed me. And we were talking about how we knew the people in the same community from, this is going back 25 years, that just kind of shows you the community that we have in ForexAnalytix. And you can see here's you guys are all on Jumbotron right now, but and here they all are, and we talk about the markets all day long. But what I was saying is, if you're not part of the ForexAnalytix family, you should be, because obviously this is a great place for all of us to congregate and talk about the markets and everything else. But okay, all right, Oliver. So, but what we did, going back to the cable, I posted this on our blog part of our community about the big double top here, and I think we have to be very aware. If you guys trade the euro pound, this right here, you can say it's a double or a triple top. I don't really care. You can argue with me all you want. It doesn't really matter. It's irrelevant, because if we break, it's going to be massive. What I'm trying to point out here is this is something that I'm really watching, because if for some reason the pound really starts to take off, this euro pound is going to be under a lot of pressure. This is one of those that I want to trade pretty aggressively to the short side, on a pound breakout. So just FYI, I think that we've had a lot of failures here, and the euro pound looks like it could really roll over. But I think Steve's going to be here. Steve, are you here today?
Nope.
Okay, sounds like he is. Hey, Steve. Good morning. How's it going?
Good morning. It's okay, mate.
Yeah, hopefully you guys are faring over there. Yeah. So what's your thoughts about the S&P here? I know you've been pretty. Well, I know you're short. I think you're short.
I am. Yes.
Okay.
I am.
So you probably have some opinions about the equity markets at current levels, I would assume.
Yeah, I'm looking at a lot of stock markets. All of them, the common thing they have is that all of them seem to be overblown in the short term. We definitely had a very strong Santa Claus rally. I've said it before. I said it before Christmas came, that a lot of people misunderstand. Santa Claus rally is considered the period between Christmas and New Year's, but people very often confuse it and think that it's in general the era, let's say in the second half of December, but it's specifically those days. So we had a very strong Santa Claus rally, and we had a very, very strong beginning of the year. I mean, until last week, we had something like 14.5% higher in the S&P within something like 17 trading days, which is a little bit less than 1% on average higher per day, which is a very, very strong start of the year.
One thing I would just want to mention, one of the things that everybody should note, that even though we were talking about the S&P here, one of the things that you can see that Greg just did is he closed out his DAX long, and that may not be a hey, I'm turning bearish, but if you're a bull, you got to think about that. Greg just closed his bullish DAX trade, which speaks volumes to me.
Yeah, I mean, that was a great trade. That's great performance. Personally, I think that since we broke above 11,000, and I'm going to show it now, since you mentioned the DAX, let's begin by there.
I just flipped over to your charts, by the way.
I know, mate. I know. I believe that actually Gregor was foreseeing this pullback. As you see, there was also like some trend line resistance there. But I do think that there is a very high chance that as long as we remain above roughly 11,000, this dip is going to be bought, because in essence, you can view this as a retest of the inverted head and shoulders that you can see here, neckline. So I do think that we can move lower towards 10,970 or something, but I would start getting very cautious there, because I think that we can see some continuation higher after we retest this inverted head and shoulders formation, because the target of this formation is, if I remember right, I haven't drawn it, but if I remember right, it's roughly at 10,600. So we're still some distance from there. So I do think that the DAX looks constructive for the time being, and I have to say that despite having built a short position here in the S&P, this is a very strong move higher. So perhaps the pullback that we can see from here will end up being corrective. Now, the S&P is currently in a very specific situation. If we go down to the 4-hour chart, we can see that first of all, there is an ascending channel. You can even see it as a wedge. If you decide to ignore this parallel trend line resistance, you can even interpret this as a wedge. So we're currently testing the support. Obviously, if we make it below there, that should point to some deeper pullback. But on the other hand, as you also had it on your chart, Blake, we at least in the short term, we got rejected from a major trend line resistance. So we are between a rock and a hard place at the moment. Something has to give. Now, if what gives us support, which I'm looking forward to seeing something like that. I think that it's going to be very important seeing what kind of a move is going to unfold from there, because if the move that unfolds from there starts gaining some momentum and starts looking impulsive, then we can be looking, as this move higher, irrespective of its strength, to be a corrective move. But on the other hand, if we see a slow pullback, a slow grinding pullback, then I think we have to remain flexible in the markets, and then we have to start considering the possibility that we have seen a low for the time being, and this move higher and its impulsive nature is just the first leg, of another bullish move to the upside, which might even take us to new highs. In which case, I think that we should shift our view and our bias and start looking to the upside. At the same time, not coincidentally, if we look at the rest of the indices, Dow Jones has broken above several areas of resistance, but sometimes like a single day can be an overthrow. So I would be very cautious. I would be looking to see what's going to happen today and the day after. Nasdaq, the same deal, but we often see little overthrows, so I would be careful here. The Russell, as you see, up at very important resistance. I was expecting that we might get some reaction from here. The fact that we overthrew it for just a single day doesn't say much. Let's see what happens today. So all of those at key levels. Now, if we go back to the European stocks, FTSE, as you see, got rejected from this previous. Okay, Blake, you can go ahead and interrupt me, mate. Blake.
Oh, good luck, guys. I got to roll. Okay, thanks, Steve.
Okay, bro. Bye,
right,
mate. Bye. Okay. So FTSE so far has gotten rejected from this previous triangle support. But now for me, this horizontal support area here remains very important. Why? Because the first time we got rejected, we came back, we retested it, and we moved to the upside. Now, so far we failed to break above it, but I have to be honest. Seeing that the DAX has crafted an inverted head and shoulders formation, seeing that on the 4-hour chart, this is also an inverted head and shoulders formation, because if we go to the FTSE, you're going to see here, we were looking at this last week, that you can interpret this also as an inverted head and shoulders formation, right? So a little bit higher, and we're going to make it to the neckline, and if we actually break above the neckline, then we will have a measured target. That's, let's see, gonna roughly, if we assume we break somewhere there, it's gonna roughly target 7,500, right? So it's much higher than the current area. So FTSE also in this case would look quite constructive. So I think that we need to be nimble. Personally, I have a short position, and if I see that we get a move lower and I go back to my break even, which if I remember right is somewhere at 26.20. I have to check at my trading account. But in that case, if I see that the move is unfolding slowly or whatever, I'll just cut my position, and perhaps I even reverse it. Depends on what kind of price action we get from there. Now, if we go to the VIX, because obviously the VIX is very strongly correlated to what the rest of the indices are doing, especially the US ones. Theoretically speaking, of course, it's the 30 days implied volatility for the S&P, but all the indices are quite well correlated. We had that spike higher that we expected in this case, but after this spike, we've definitely seen VIX pull back, quite strongly. We've even broken below this ascending trend line support that we had, playing some important role in the RSI for a long period of time. Now, personally, I've said many times, I don't think that in this business cycle the VIX is going to fall and start oscillating at the previous depressed levels that we had in 2017. 2016. So I believe that even under calm conditions, even if we push to new highs, the VIX is not going to start trading to single digits once again. I do believe that even if we push to new highs, that's going to be some kind of a temporary condition, because I do think that this business cycle is already very near its end. But as I said, I'm not going to trade based on that. I'm going to trade based on technicals. Okay. Speaking of which, I forgot to mention one index that is quite important, and this is the Nikkei. Why is that? Because I was monitoring the Nikkei as a potential bear flag or pennant. If you look at it as a pennant, we had a little overthrow, and now we've come back to retest this ascending trend line support. So I would be very, very careful here, because if we do break this trend line support, at the same time, here is the USD yen. You can see that the USD yen so far has found resistance in this bear flags resistance area. So I think that if the Nikkei gets rejected from there and starts accelerating the downside, I do think that the USD yen can suffer somewhat. Now, can it really make it back to the spike low? I'm not sure about that. But I do believe that at least retesting the lows here, ignoring the spike, the lows that we had, irrespective of the spike, is quite likely. So even pushing to a new low, as I said again, ignoring the spike, right? So I would be quite careful here. One of the pairs I would definitely not be buying is the USD yen, because in the short term it looks heavy to me, and from a technical perspective, it looks to me like it can really pull back from here. Now, I don't remember who I had this conversation with, but we were looking at stock indices. I think it was with Joe, actually. Yeah, it was with Joe yesterday. So, if we assume that we get some risk on environment in the weeks to follow, and as I said, it's going to be healthy to see a pullback first. But let's assume that after that we get some risk on environment establishing itself for at least several weeks. What I would be looking for as interesting opportunities, I would start by having a look at the Shanghai Composite, because I think that if we make it above this trend line resistance, then if I zoom out, you can see it here. I think that the Shanghai Composite has some room to move higher. The same happens with, of course, it's strongly correlated with large capitalization, large cap shares. For China, you can see this was an expanding triangle, but it transformed itself potentially to a double bottom here, right? So we had a double bottom right at the 61.8. So if we do make it above this trend line resistance, and as you see, this trend line resistance is quite significant because it has been tested by the market several times, so it has proven its value. And one more thing, the 200 daily moving average is converging to this level. So I think that it is very likely that until we make it there and we make it above, perhaps this is going to be a confluence of resistances at roughly at this level, like 42, 42 and a half. I think that that will then point to further gains, right? As I said the other day, one of the indices that led higher was the Australian index, which after overthrowing this descending wedge, had a very, very nice move to the upside. And, given the fact that at the same time the Aussie was recovering, at least against the US dollar and several other currencies, that shows that, this is real strength and this is not like strength assisted by currency weakness. So I would consider that even more important, which means that even a pullback from here, which as you see is quite a strong area of resistance, we probably find some willing buyers at a move down towards 57.80. Okay. Now I know that Blake covered today in a short period of time, quite a lot of the currencies, at least the main ones, the popular ones. But we still have a few of them to look at. Beginning, we can start by having a look at the exotics, just because we have a friend here asking for USD ZAR, MXN, and TRY. Okay, let me start by the USD MXN. Since Blake briefly talked about it, let me say here two things. First of all, let's have a look at the big picture. Big picture, what I see here in the USD MXN is a symmetrical triangle. So I don't really have a bias in the medium to long term. But if we want to have a look at it in a shorter term horizon, there are two things that have happened here. First of all, we went from overbought to oversold conditions in the daily RSI, more or less without a breather. Okay, we actually called that high there because it was a nice confluence of this ascending wedge and some nice RSI divergence. And we also had that trend line resistance that were all more or less confluencing there. But now we're seeing some type of a recovery. We finally broken above this steep descending channel. The question now, the $1 million question now here is, okay, at some point we have had to have some kind of a breather, some kind of a respite. So is this break higher, some kind of a new move to the upside, or is it just a corrective move? I would have to say the following. As long as this horizontal resistance area is holding, I would be a little bit careful with the USD MXN, okay? Because I wouldn't be surprised if we saw some type of rejection from there and another move lower towards, once again, the towards once again towards this this symmetrical triangles support. So I would be a little bit cautious with the USD MXN here because I do think that there is the potential for more weakness towards roughly, let's say, 1850, 1860. For me to start looking higher, I would want to see some gain of momentum to the upside, and definitely taking out the 1930, 1935 area. Okay, now let's go to the USD ZAR, the USD against the South African rand. Now, so far this move lower definitely doesn't look impulsive to me. Okay, I mean it's slow, it's choppy, it's overlapping. So I would be quite cautious here, especially the closer we get to 1350. As you see, so far we're having trouble bypassing this this 200 DMA area. But one thing is for sure, USD ZAR doesn't seem to be in a rush going anywhere fast at the moment. So although I will keep monitoring it, I don't think that this is the time you should be getting involved with that. It's not very different with the USD TRY, although I have to say here, given the amazing bullish move to the upside and the fact that the move higher so far has corrective characteristics, which is completely opposite to what we have been seeing for years whenever we had a move to the upside. This makes me believe that the move to the downside is not over yet. So probably there is more weakness to come in the USD Turkish lira before we get another push to the upside. So if I draw this as a parallel, it looks likely that this is some kind of a flag which might produce one more leg to the downside. So I have to say that between USD Turkish lira and USD ZAR, I think that the USD Turkish lira looks better. The Turkish lira specifically looks better. And it looks like it might have more strength against the USD in at least in the medium term. Okay, before we see the uptrend reestablishing itself. I have a question about the EuroCAD, and yes, I can show you the EuroCAD both on the daily and the 4-hour chart. So EuroCAD, broke higher from this. It was probably a triangle, right? And we had a strong move to the upside, but then we got a rejection from the 61.8, and we got an equally strong move to the downside. Having said that, we haven't broken down below this trend line once again. So I would be quite cautious here, right? Because as you see, if I zoom out, first of all, the EuroCAD, has been producing on occasion wild moves to the upside and the downside. But as you see, if you look at the long-term chart, it hasn't been really doing much on a long-term horizon. But now if we go down to a 4-hour chart, which is going to give us a better understanding of what's happening in the short term, actually, as you see, this can easily be interpreted as a descending wedge, in which case, especially if we break it above this horizontal resistance area at 151.70, I wouldn't be surprised to see more strength, towards, let's say, the 50% fib before seeing more weakness. So I do think that in the short term, it doesn't look bad to the upside as long as we manage to clear, this horizontal support resistance area. Okay. Having said that, that doesn't change the fact that I don't think that that's one of the cleanest setups out there, which means that I don't think I would get involved with that at the moment, right? I mean, I'd rather be going with very, very, I'd rather be going with setups that you look at the chart and within a few seconds, you have a very strong opinion of what's about to happen there. If I look at the chart and I don't immediately get a light bulb, lighting up in my mind saying, ooh, that's interesting. I'd rather, go with something else. And, EuroCAD is definitely not something that jumps out to me and says, you should definitely be looking to trade here. So, I'd rather wait for it to produce something more concrete. Hi, mate. On the USD card, are you still planning to keep on selling it? Yeah, absolutely. Absolutely. In my opinion, having to do with FX, this is by far one of the best looking opportunities out there, right? And as I said the other week, it looks good if it makes it higher, and it has been pushing higher. I think it can easily make it up to 134.50. It's exactly the same thing I said last week. And yes, I will be looking to scale in further. I only have a quarter of a position, but I think that even today I might sort another quarter of a position, and as we move higher towards 134.50, I think that the risk reward ratio is going to be becoming even more and more appealing to see a continuation lower, because this rejection from this channel was definitely impulsive. So even if this is a corrective move, it is a corrective move that's missing one leg to the downside. So that's my point of view. Okay. So I would be looking for more weakness at some point in, decently soon to unfold, taking the pair down towards 130. Okay. So this is what I thought last week, and nothing has changed from a technical standpoint for me to be looking at something different to happen here. More or less, although I prefer the USD CAD between them, the same applies with USD NOK. USD NOK might get rejected once again from here and might even build a nice head and shoulders formation for one more leg to the downside. So I would also be very, very cautious in buying the USD NOK from here. The reason I would be more cautious with the USD NOK is I can't really ignore the fact that USD NOK has broken above a very long-term descending channel, and it perfectly came down. It tested the broken channel's resistance as support and found support there. So this is the main reason why I prefer the USD CAD as a short in comparison to the USD NOK. Of course, if the USD NOK comes back and makes it down to retesting this trend line once again, and then makes the move lower, then I will be more or less convinced that there is more weakness to come because we're going to have a perfect head and shoulders formation in place. Okay. So yeah, my plan remains the same in regards to the USD CAD. Please, could you show me the Kiwi and the Aussie yen? Sure, absolutely. Okay, Kiwi. Let's start from there. Here it is. So I know that Blake had a different technical viewpoint yesterday. I mean, he has drawn it in a different manner. But personally, what I was looking with the Kiwi is I saw a move higher. I saw a corrective move lower, which channeled, quite nicely. And now I'm seeing a move lower, which, as long as it remains above this broken channel, and as you see, it's currently testing previous horizontal support resistance zone, I wouldn't be surprised to see another move to the upside towards the 61.8 of the last move lower here at 70.50. So if I had to do something with the Kiwi here, I'm going to be very clear. I would be actually buying the Kiwi. Okay, I would definitely not be selling it here. I can tell you that much. Now, having to do with Aussie yen, and I think I have a chart on the 4 hour as well. Yeah, there it is. Okay, Aussie yen, very nice rejection. We showed that last week as well. Very nice rejection from the confluence of previous support zone and the 61.8 of this move lower. So I'm not really surprised that we got rejected from here. The question is, okay, we got rejected from here. Let's go back to the daily. Now, what happens from here? Does that mean that we're going to new lows? I'm kind of doubtful. I think that, as long as we remain above this zone, I wouldn't be surprised to see after a little bit more of weakness, more strength, because the fact that we recovered so strongly after this spike lower makes me very, very cautious being short. I think that we had a strong move to the downside, and we might end up consolidating here. We might end up pushing lower from here, but reclaiming the lows, at least not in the short term. Okay, so I think there was a nice trade here, and we talked about it last week, shorting that confluence of resistances for a pullback. But would I be riding this hoping, for accelerated weakness? Probably I wouldn't, because I don't think it's one of the best opportunities out there. So I would remain very cautious here. But if I see this move to the downside unfolding, slowly and in a choppy manner, I wouldn't be surprised at all to see more strength, at least in the medium term. Pound CAD view, Euro Swiss, high face and high conviction trades just now. Yes, as I said, I don't think it's an easy time to be picking trades, but USD CAD to me looks very appealing. Okay, so my preferred choice in the FX world at the moment is USD CAD. Crude, yeah, absolutely. Crude. Let's go actually to a 4 hour chart to talk about crude. And then I'm going to cover all the rest of the questions. Okay, here it is. So, crude. We had this inverted head and shoulders formation. Okay, we tagged its target, we made it higher. This is even likely a bull flag, or it could have been a triangle, in which case we saw a new high, and now we're seeing a pullback. One way or another, I'm expecting, you see that we also had very, very strong RSI divergence on the 4-hour chart, right? You can see it very clearly here. There it is. Very strong RSI divergence. Okay. I'm expecting that this pullback has a very high chance of being corrective in nature. So even if we don't hold the retest of this channel, I think that it's not going to be easy making it below 49.40, in which case I would be looking for more strength and I would be looking to buy crude once again. I made a killing to the upside. I could have made more, but I can be dissatisfied. I made more than 10% in this trade higher on average. So, but I would be taking a stab looking for higher levels once again. I think 49.50, 50 is a nice area to be looking for more strength. Of course, I have to see how this move is going to be unfolding. But I would most probably, if the price action doesn't give me completely different signals, I would most probably be looking in the next few days or weeks, depends on how fast this move unfolds, to be involved with crude once again. And obviously, at that point, we might see the next push lower in the USD CAD, USD NOK, etc. Now, we had a question about the pound CAD. Let's have a look at it on the 4-hour chart. So here is the pound CAD. Okay, pound CAD. I have to say the following. This is more or less as you see a channel. The price action in pound CAD is nothing else than corrective. I mean, you can't interpret this thing in a different manner than a correction, okay? So I have to say one thing. The closer we are getting to this, let's call it a channel, it's roughly a channel, the more appealing the risk reward for another push to the downside. Okay, so if I was looking to do something with pound CAD, it would be shorting it. The closer we get to 174, the better. Okay, looking to buy this kind of a price action, very dangerous if you're asking me. Okay, so the path of least resistance in the medium term remains lower. And as I said, the closer to 174, 174.50, the better the risk reward. Euro-Swiss. Okay, Euro-Swiss has broken. Let me pull up the chart first. Okay, has broken above this descending trend line, but more importantly, it has a chance of producing a nice double bottom here. Of course, for the double bottom to be confirmed, I would need to see a move above 114.50. By the time we make it up there, probably the 200 daily moving average will also have converged there. So it's going to be a nice confluence of resistances. So then we can be talking about a range between 112 and 114.50. And whichever of those two levels break, 112 or 114.50, I think we're going to see a continuation to either of these directions. If we break 112, we should see a decent continuation to the downside. If we break 114.50, we should see a bigger recovery, perhaps towards 116.50, 117. So as long as we remain in between those two levels, especially given the slow moving nature of the pair, I wouldn't be looking to do anything with it. Okay. We had quite a few questions today, which is a good thing. Keep them coming. Okay, I think that I covered the vast majority of them. So now let's go ahead and have a look at the metals. And by the time we finish that, I'm sure that Coach will have his guest being here. Coach, you do have a guest today, right?
Yes, Saeed Zaman is with us and in the house.
Okay, perfect. So gold. Gold back testing this broken channel support and this trend line, this broken trend line. So as long as this is holding, I wouldn't be that much surprised if I saw another push to the upside, but I would be very, very careful after that because I still think that this move higher is likely to be corrected in the medium term. Okay, silver, same situation. We came back, we retested this previous horizontal support area. We seem to be holding for now. As long as that's the case, we might see another push towards 16, 16.10, 16.10 and change. But then I would be looking likely for a failure. Gold-silver ratio has had a nice rebound as we expected from that support, but might fail from somewhere here, in which case we might see that last push higher that we were talking about in the metals. But I think that between all of those, that's why I left it more or less for last. By the way, platinum remains one of the weakest ones, and I would be very, very careful if we break this trend line support. I think more weakness is coming, and definitely platinum has been one of the weakest. So I think that if we see more weakness coming through in the metal complex, it has no reason why it shouldn't be suffering most, as it has been doing in the past. But now, I left for last copper. Why? Because copper is retesting this previous horizontal support resistance area, and we still remain below this triangle. So as long as that's the case, we can see more weakness from here. So I would be very, very careful here, because the risk reward does not favor being long. And most importantly, palladium, which, finally seeing some pullback after testing this ascending channel resistance. But be careful, because we're approaching this previous congestion area roughly at 1330. So I would be a little bit careful here, because if we see one more push to the upside, it wouldn't be so much of a surprise, because, palladium has been extremely strong. Definitely, though, if you see a move low, below this aggressive ascending channel, something bigger is unfolding here. I think, palladium is one to monitor within the next few days. So, Coach, you said that your guest is in the house.
Yes,
so enjoy
buddy.
the interview.
Great rundown. Great rundown
Okay.
as usual, Steve.
Thank you.
I came in, with a lot of conflicting views, and some looks helped me. I appreciate it. Thank you.
Thank you. Kostas is, by the way, saying that euro is getting hammered down. And yeah, more or less it's the case. I would be a little bit careful, though, because we have this ascending channel. I've reiterated that plenty of times. This ascending channel did not look impulsive. And the reason why I never bought the true breakup from the 114.50 area, if you remember, was the fact that USD Swiss, and I said that many, many, many times, USD Swiss was telling me something different, right? So
Yep.
this is one of the cases that
Correlations help.
correlations. Sometimes correlations help you make a good trade. Very often correlations help you avoid a bad trade, right?
And sometimes they break down.
Yeah.
And you're going, wow, it shouldn't be doing that.
So I have to say the following. If we see a daily close below that channel in the Euro USD, it's definitely going to be a technical event, especially considering that the USD Swiss has already made that move several days in advance, right? So I think people should be very careful trying to fade that. Okay. So,
okay, buddy.
Have a wonderful interview.
Thank you, Steve. Hi, Saeed. I see you. Welcome back to Face. Making you the presenter, my trading warrior brother. Always enjoy our conversations and your looks with your quarterly views. I think you're the only one that does that. So you want to start with the Swiss. So welcome back, Saeed. Happy New Year to you, buddy.
Happy New Year to you, Dale. Thanks for having me on again.
Oh, you're very welcome. Listen, I want to acknowledge last time you were on, gold was near the lows and had its initial rally. And I'll quote you. You said, I want to buy an irregular correction in gold. And that was exactly the right prescription for being long gold. Before we get to the Swiss, were you disappointed with the euro action? I think you were constructive then, too. And the gold way outperformed the euro. And I kept trying to buy the euro at different stages. How about you?
Yeah, I mean, I tried to buy the euro a couple of times, but it did me over. But recently, I've been looking for shorts, so sort of mitigated what I've been going for. But with my sort of trading, I wait for a lot of confirmation. It's like I'll have a plan,
right,
but there needs to be a sequence of events that unfolds first before the trigger. So, like I think it was last week, I tried to go long here. And it went up a bit and then it collapsed. As soon as that low broke, that was no good. So then I was looking for shorts. And I did short it last week. back into these lows into this. But I do think euro goes lower. But thing is, we got ECB coming up, and I think a turning point is coming soon. Whichever way it is, it doesn't really matter. But yeah. So
Okay.
shall I start off with euro, and then we go from there?
No, well, let's start off with what you wanted to talk about, because there is that correlation with what's happening in Swiss and the euro. So let's talk about US dollar Swiss, like you
Dollar
originally
Swiss. You planned US dollar Swiss. Okay.
Yes. Isn't that what you had up first?
Oh, I just had a random chart up. But okay,
Oh.
yeah, let's do dollar Swiss. So dollar Swiss, we're looking at this level here. So I initially was looking for shorts, but there was no breakdown. So last week I tried to short dollar Swiss. Where is it gone? Here. I tried to short dollar Swiss here, and it took me out. So at that point, I'm thinking, okay, if dollar Swiss is pushing up, and at the same time dollar was pushing up as well, it gave me my green light to short euro. So that was a little day trade. But macro V, if I'm looking at dollar Swiss, I still think it goes lower. But I think first we wipe out these highs here. And the way it's looking to me, I think we pop into this level here. And for me, it's going to be a make or break from here. So
Okay.
I think one more run higher. And also, you see this key level here. So this is a key point for me here. So if you look,
and these are your quarterly pivots or daily pivots. The dark lines are.
Oh no, they're just basically they're just basic SR.
Okay.
Basic SR at the moment. I mean, new year, so new quarterly candle. Still got a bit of time to go before I start looking for longer, strong swing ideas. But the fact that we've closed above this black level here, we can see previously when they found resistance, they sold off. I would have wanted to hold below here and make a lower high. It didn't. It's got back above there, which tells me as long as we're above this black line here, it's got to be bullish. So where would be the target? One thing being bullish, but where would be the target? And we got clear targets here into this grey box here, where the move initiated from. So I'm bullish dollar Swiss. At that point, I'll see what happens. We'll see what euro is at. We'll see what dollar is at. But yeah, it's going to be a turning point.
Yeah,
so if
a lot of people have some pretty lofty dollar levels for where the dollar could go. Could it be that the Swiss giving fairly new buy signals to you and the euro giving fairly new sell signals to you could be the beginning of a trending move that might have in euro 400 or 500 pips to the downside? A lot of people have a line in the sand in euro around 1320. That would change the picture for them closes under there. Do you think that's a possibility, that we're just going to blow off in the dollar again? Because I certainly have spent time trying to top pick it.
To be honest with you, I mean, I think it's hard to choose a solid direction while we're within this range, the top green lines. Until we make a clean breakout either way, we're still range bound. So we got to play it both sides.
Okay.
So yeah. So now
so you would need closes back under that green line. Looks like around 1220 or something like that to give you a
not necessarily closes, but a clean breakaway from it. So for example, here we had a close here, but that was a fake
false breakout. Yeah.
So at that point, when this happened, this sort of put me off longs. So that means we're just playing down to the other side of the range. So when this broke, the key target was the midpoint of this range, which is the black line. Now that we've broken below the black line, where's the next liquidity going to be resting? It's going to be this low here and working towards this low here. So So I'm targeting here short term, but I think we probably take out these. And with ECB coming out, usually if they're going to have a massive reversal, it's going to be liquidate everybody, get everybody convinced that we're going one way, and we can even draw a trend line here. So
do you hold positions into a big red event like that, the ECB, or will you be flat going into that day?
Unless you like got a massive stop loss, there's no point. I mean, take into account the slippage you could take and stuff like that. There's no point.
Just
because
checking. I figured, but just go ahead.
If it's going to be a big trending move, there's always going to be next opportunity. You'd rather let market tell you, okay, we've confirmed a top or a bottom, and then step in. Personally, I don't trade. I mean, who knows what happens really at these events? Market does whatever he wants. But yeah.
Exactly.
So
Yeah.
the way I'm
Yeah.
looking at it is, okay, I'm looking at this right now and I'm thinking, okay, everybody's probably going to be short in this, which is fine. Short term, go down. So at which point would I get bullish this pair? Well, we're at a key level, this black line here, which is the midpoint between the two green lines. So ideal scenario would be play this lower into there. Now, if it gets back above the mid-range, that would be a fake out of a trend line as well. At that point, however low it goes, it doesn't matter whether it comes into here or whatever, I've got to ask myself, at which point am I confident on that idea? So once, however low it wants to go, once it does this, fake out, even a daily close, get everybody in. But if it gets back above here, then and only then will I start getting bullish again. And then if that's the case, then it's a reversal, then it's going to be a rapid one, because if everybody's short, wipe them out in one go. And if you're in sync with the trend, it usually doesn't waste time.
Yeah, interesting view. And initially it's got to become back above your key pivot, and you don't go with the initial move through your pivots. You wait for pullbacks to them to commit dollars or whatever currency to the trade.
Yep. Now, what also gives me confidence with this idea is, okay, if I'm in the euro, what's euro doing on its own? Maybe that's not enough. So I look at the crosses as well. So
Euro
if
pound.
I look at, not exactly euro pound in this situation, because euro pound's really weak, but euro Aussie and euro New Zealand.
Okay.
So if I just look at a macro view of this, right, on a monthly, right, I remember speaking about euro Aussie previously, so what I'm looking at is a key level, this black level there. Now we can see it's important. Why? Because we can see the reaction there. I mean, this reaction at 2,000, a couple of thousand, however much it was, a couple of thousand pips. Reaction there, there. So it's come down here, and the fact is it's holding above that. That's important to me. So, this pen tool is annoying me. 1 second.
Sure.
Yeah. So on the weekly, if you look at the weekly, we've come down and we've taken out this low here, and we're making a higher low. So now whatever pullback, as long as this low holds, is bullish for me. So now that it's coming to key support, I think that if the euro's gonna rip, a low is coming in soon. Now there's two things that could happen. Either commodity currency is really weak, which push it up. But I've seen, like, in risk-off events where euro holds quite well and the commodity currencies just get thrashed. So I'm waiting for this right now. So thing is, okay, it's that key support. Has it confirmed to me? No, it hasn't. Yes, we're having a bounce, but I need like an impulsive move away from it to convince me. For example, here, when it came to a key level around here, it consolidated, then broke out. When it breaks out of the range it forms, that tells me, okay, now the low is in. I can play it to the upside. So it either makes an impulsive move from here, and then I get in, or it probably, if it breaks this gray box, it's probably going to fill all this in. But my main line in the sand is as long as this low holds. I really want to see that hold. But it's showing to me bullishness. And looking at the weekly, I mean, it is looking quite bullish. Another pair is Euro New Zealand. So if I look at Euro New Zealand, similar scenario, okay? And on the weekly, you can see that it's starting to turn. So we've got this key SR level here. So if I get rid of this one for a second, look at the range we're stuck within. We're stuck within this range here. All it's really done is take out one side of the range, get back within it, take out the other side of the range, get back within it. Okay, so this is still range bound. Now looking at this, this will be my confirmation. So for example, if this was a 5-minute chart, I'd be long with a stop loss there, playing it to the top of the range. Now we can use that and say, okay, I've got a macro bias now. So if we look, so I'm looking for some sort of low to form, probably after ECB, because I don't want to take no risk ahead of that for long-term trades. But I'm looking for, I'm looking for bullish moves on Euro New Zealand. I really do think, as long as we can stay above this black level, and the fact that it respected it so perfectly and closed within last week's range, that alone is a bullish sign. So if that's the case, the next target is going to be here short term, and then there, as long as we stay above here. So you can day trade it towards there, or once you can establish a swing position. Excellent to keep adding on to there.
All right. Well, speaking of central banks, I believe we have BOJ this week, or was it last week? Wondering what your view is. I know you're a U.S. dollar yen trader. You still have a bearish bias, and I wanted to ask you, the flash crash we had before New Year's, where you get that huge wick. Do you just ignore the wick? I've been asking people, do you ignore the wick in your charting? Okay.
I do. I see them as anomalies.
All right.
I see them as anomalies, and then price goes back and continues its regular trading. I was fortunate to be on board most of this, but yeah, I'm very bearish dollar yen. I'm going to get to that right now because there's better plays than dollar yen. I believe Aussie yen and New Zealand yen, and I personally think New Zealand yen is going to be the play. So I'm gonna talk about the yields as well. So if we look at New Zealand yen and Aussie yen, let's compare them two together. Both of them. Sometimes it's better to play the crosses rather than the actual dollar yen. But if you look at this right now, I mean, the thing that sticks out to me is this. You've got a high there. You've got a lower high there on the New Zealand yen. New Zealand yen was unable to make a higher high. But if you look at Aussie yen, it's got a high and a higher high. Now, they're both into key resistance levels. This is into here. Okay. And then this, and then the New Zealand yen, okay, the key level I've got marked out is here. Okay. So looking at this, if I was to look at this on a macro view, okay, where has New Zealand yen been stuck within? So it's this low here, okay, and this high here. So it's been in a range-bound environment. So ignoring this wick because it was an anomaly, okay, I'm pretending that's not there. I still think we go down. Now, you can play aggressive, okay. If I was to play this aggressive, my risk will be above this high here. But more conservative play, if it's going to break out of this low range low again, how many times is it going to keep tapping it before it breaks out? Remember, this play I'm thinking is something like this. For ages, it was in the range, but when this takes off, it's thousands of pips. I believe that if the conservative play would be if you clean break of this low here, we're going much lower. And if I look at the ranges and how the market is actually moving with this pair, it's 1,000 pip ranges. So if I mark this out, exactly 1,000 pips there. So I'm assuming a measured move would take me to 1,000 pips there. So I'm actually, if we break that, I'm targeting there. Okay. Now, what supports this further is if I look at this this chart here. If I look at the Aussie yen and the Aussie yen yields, okay, let's look at what's happened historically. Historically, right here, Aussie yen made a high and then a higher high, but the Aussie yen, the yields made a high and then a lower high, and then this told me that was a fake out. Look where it led to, massive sell-off. Again, we had the same thing happen here. If we look, where's it going? Yeah. Similar thing happened here, high, then a higher high, high, then a lower high, sell-off. But look at it again. We're getting the same thing again while we're at key technical resistance levels. So why do I look at this? It's because I look for further confluence. Now, a lot of people are talking about Aussie yen, but I personally think New Zealand yen is going to be the big mover. And why do I think that? Is because if I look at the Aussie New Zealand, now I do believe they both will drop. If they're going to drop, they both will drop. But I'd rather be on the bigger mover. If I look at Aussie New Zealand, right, look where we're at. So we've just taken our previous month's low and we're quite strong right now on the monthly. Now, I think a lot of people are going to be shorting Aussie New Zealand. Reason why, we've got this there. Yeah, okay,
they already are
retest. So I took a long, but I was out at this level here, which is the weekly high and into key resistance. Now, if that's the case, I've got a clear level for confirmation, which would be if this brown line here, the top brown line and the bottom brown line are last month's high and last month's low. Let me just confirm that. Yep. So we're within last month's range still. Okay. So if Aussie New Zealand makes a clean breakout, that's screwed over all those shorts playing the retest of the trend line, and we're getting probably a push up, which probably mean that New Zealand weakness is weaker. So yeah, and on a monthly, I mean, we're right at range low as well at the low. So this has been range bound for what years? So just a range play back in the back up would be it. Yep.
Great luck. I like the way you notice rhythms, like the ranges, 1,000 here, 1,000 there, 1,000 there. It's kind of like a market having its own rhythm and kind of a cyclical type of moves that you could look for. That takes a good eye, man. Good eye on that.
I think most people focus on entries, but okay, the entries one thing. What about targets? It's like they'll be in a trade, they'll go well, get all excited, but they can't take the profit. They can't. Do you have a reason for it to go there? Well, my reason is previously doing 1,000 pip ranges. So if history repeats itself, it should do another 1,000 pip range. Does it line up with my high time frame bias? Yes, it does. So I think it's always had to have, okay, where would you exit then as well? People don't like to focus on exits. I think that's a big thing. There's one pair that I want to get back to gold after this, but the one pair that really stands out like a sore thumb to me, which is New Zealand CAD. Now, New Zealand CAD, if I look at this, I mean, looking at this alone, I mean, look at the candle here. I think it just fills in all of this into there. And if you look high, low, lower high, lower low, lower high, I'm expecting a lower low, but even within that, I'm expecting a move like this. Now, this is another pair that lines up with what? My New Zealand bias. So I look at as many New Zealand pairs as I can and say, okay, if all the and compare all the majors, New Zealand dollar is the one that's going to weaken the most. I'd rather go with the weakest. So I believe that this is going to drop hard. Now, what I'm waiting for is an entry on this now. So I've got the weekly open marked out on this, which is the green line. So if I go deeper down, I think this is a pullback, okay? And I think the CPI tonight will probably be the make or break point for it. So what I'm looking for is, I've got my range marked out, intra-week range. And usually ahead of a news event, you're going to get this kind of squeeze, which is good. So what I'm waiting for is, okay, a clean break below this low here. So
around 89 and a half.
If we smashed below here, we're back into the week's range. We're below the weekly open. Then I think the high of the week is set. And then I'm expecting a trending move down, at least to fill this in, at least back into here.
That was a gap?
Yep.
Or just a news event? Just a news event, probably.
I can't remember. It's back in November. But regardless, whatever it is,
yeah,
it's towards our target, which is there.
November, it seems like 10 years ago already, doesn't it?
It does, doesn't it?
Okay, so yeah, some great looks, and you know, I really appreciate the look on Aussie New Zealand, because people were so bullish that pair last year, and then they finally flipped them, and there could be a turn developing there. So thanks for bringing that to the table.
I think all you got to really look at is the monthly chart for this, and it should tell you, until we get a breakout, play both sides of the market.
Yeah,
I mean,
it is a range.
This is just stuck. Gold, I promised gold. So I'm gonna do a macro top down on gold. If I look at gold, right, I'm looking at this chart, and what I've done is with this is I've marked out a range from this low here all the way up here. Okay, look where we've come off here, mid-range. So we've held the midpoint. Now we've been in a consolidation for ages, but if we start marking out our levels, we can see this is the low it's held within, and the high is
1360.
We'll just call it around here.
Yeah.
Okay, so we're still stuck within the range. Again, all it is a range play. And macro view, as long as it holds above this level, it's bullish. Anything towards that, that's a good buying. A clean break below it, then obviously we're going lower. So it's obvious where it wants to go, which is here. That's on a monthly basis. And then a clean breakout, then there. So last month, obviously, we had a big up candle. So we're going to get some sort of pullback, especially with the new year. So what I would do in this case would be mark out the monthly open. So what I'll do is I'll go to another chart for this. It's the short term time frame chart, which is here. Now this is a key make or break point for me. So I'll mark out the monthly open. So what I'll go with is last month's close.
Okay.
Okay, that's that. Now if I go to the lower time frame, we're right there right now. Okay, so I'm looking for a pullback. The question is, how deep does it pull back? So this was support down. We pushed the market support. It broke below it. Now, for me, it's a turning point here, at least for a short-term opportunity. If this is to go higher, this low should hold. So for me to short it short-term, I need to see a failure of that. If this breaks, then my risk will be whatever the high is, and I'll have short-term opportunity into here. Okay. Now, if it did something like this is where the pen tool helps. If it did something like this, and that tells me that this was just a deviation. Okay. And a run of these lows, then at that point I'll wait for bullish price action here. If it was finding support previously here, I'm expecting it to do support again, and then continue my bias. Okay, much higher prices, and then going on to the shorter time frame chart. I say short time frame, weekly. We then continue the move up. Now we've been consolidating for ages, which is normal. I mean, after such a big move, you're gonna have some sort of consolidation. So I'm then expecting a push up. So I like the fact that we've taken out last week's low, but we need that confirmation, which would come in the form which I just explained. At that point, I don't think it'll waste time ripping higher, taking out these highs, and ultimately around here, which we explained on the monthly chart.
Okay, well, I can't let you get away, because I know that your following expanded as you expanded into the crypto space. So well, I'd like your view on Bitcoin. You know, that does nothing, and then in 2 minutes it does everything. And how do you trade that thing, buddy?
Me, I mainly trade Bitcoin on a swing basis. I don't trust these exchanges. I mean, look at these dirty spikes you get in these
Yeah,
exchanges.
yeah,
But
yeah.
let's go along with it where my Bitcoin view is. So, oh God, my chart is such a messy. I need to get a clean chart out. I'm good. Let me just refresh this chart because I've got key levels marked out for this.
Why do you think there's so much more interest with new people coming into the trading scene with crypto over FX?
Well, I thought it was quite obvious. It's just because they've seen Bitcoin make 20K move, and they all think
Okay.
every other coin is going to make a 20K move as well. But this is the
All
thing. Now that everybody's in, it's probably not going to happen the same way. So until those people have been wiped out, then we can talk about new highs. But for now, I mean, let's look at Bitcoin. So I've had this range marked out since back in November for ages. And this range is basically, if I go to the daily, and it's still stuck within that range, which is this high here and this low there, and we got the deviation there, we got the deviation there, and this is the midpoint. Okay,
right.
So that's those same levels are being used again. So the midpoint was respected perfectly there. Where did it go? Back below to the range low, rallied, deviated it there, got back above it, and is holding it. So for me, this is the key level, the range low. But what I'm thinking of, whatever down move here is just a retest of this consolidation. So if this was a 5-minute chart, for example, I'd be long with a stop loss there. If this low gives in, then I think we go much lower and we probably go down to around 1800s, possibly even 1200. I think about 1200 if we take out this low. So thing is, who's going to hold us
bad from here? Yeah.
So the thing is, if you don't want to stop loss that wide, what would you wait for? Well, you'd wait for a bit of confirmation. So my confirmation would come in the form of getting above mid-range. Okay, if you got back above mid-range, then I think we go higher into the range high, and all I do is play it from level to level, and that's it. Now if you broke out of this, then I'd say okay, higher into there and then there. So short term, we've got a smaller range we can work with. What's that smaller range? It's this low here. Okay, and I'll just mark out this, which is last week's low. Now what I would like to see is if we can get above here, if we can get above here ideally. Okay, this is still range bound. So if you broke this black line cleanly, I'd play short term towards here. So I need to wait for a clean break before I even enter. So a clean break of this retest, I go short there. If it breaks above this black line, top black line, I think we push up into this level here. And then clean break of that, play to that level.
So just trade the levels.
Yeah, level to level until it breaks out. And that's all we can really do in a range-bound environment.
Right. So, Saeed, the best way for people to follow you, I know your Twitter handle at Trader1SZ. Anywhere else you would suggest? I think you do have a website. Now would be a good time to show it if you'd like.
I have a website, yeah. But Twitter. You can't be my Twitter. That's if you want to contact me. I probably ignore most people. I mean, crypto's doing my head in lately, but yeah.
Okay.
I think you know what's funny, right? I use that as a sentiment, really. I know I know it's gonna sound weird, but the sentiment's weird on that because it's so emotional. People have put so much money in this and they've been chasing it. You compare the mentality of someone on crypto, compare that mentality to someone on FX. The questions you get asked is completely different. And a lot of people that are coming into crypto, they've seen what the news is saying, thousands of percent gains, this, that, the other.
Yeah.
And I think it's just manipulation to get people in.
Yes,
and,
it is.
And a lot of them, they say they're trading, investing, but they're not really, because you're looking at the chart every couple of times a day. So unless you're like holding it long term and not looking at it, you got to remove that emotion. Whereas FX traders, they just get on with it and it's just like trading because they've got more experience with the market. So, yeah.
So you really need a lot of patience to work with those people.
You do.
Do you have it? Do you have it?
I've got no patience with them. Instant block. That's it.
All right, buddy. Well, I tell you what, Saeed, some great views. I have some ideas. You got to find our community. Mission accomplished, my trading warrior brother.
Thank you very much. Thank you.
You did it again. You know, you never disappoint, and it's always eye-opening for me for some of the things that you're looking at. And I have some biases after this interview. So thanks again, Saeed, for being with us. And I hope 2019 is your best year ever in all ways, not just monetarily, but in all ways.
Thank you very much, Dave. Thank you for having me on.
All right, buddy. Everyone, Saeed Zaman, you could follow him at Trader1SC. That's a wrap for today's session. Good hunting the rest of the day. All the guys that are members chat, go join them. See you tomorrow. And remember, don't just count your pips, count your blessings. You're very welcome, Tom. And we'll see everyone tomorrow. Adios. Thanks again, Saeed.